Welcome to All Things Real Estate. My name is Margaret Capranos, and I'm a realtor here in Marin County with Zephyr Real Estate. Today's program is going to be on the very difficult decision to either stay or move, especially as you're approaching retirement age. The question of whether to stay in your house is a very difficult one because you've lived there for a long time. You have a lot of memories there and no doubt a lot of possessions as well. Just the chore of moving alone is enough to make people want to stay in place. But there's a real reality as well that this house is probably bigger than what you need. It also probably has a lot of expensive maintenance. And the question is, when your income is reduced post-retirement, how can you keep that house up? Where will the money come from? Does it make sense to take income, put it into an asset that might be illiquid, and what happens if you should need that money? So it really poses the question of, is it smart to stay? Perhaps we should think about moving or downsizing. Today we're going to really be exploring what it would look like for one particular option that we have here is a reverse purchase mortgage. We will be hearing from an expert on the topic. We'll also be talking about who else should be on your team of experts to help you to make that decision. There's a very interesting rule that I actually would like to read here. It's called the 4% rule, put out by the Society of Actuaries. It states, for a client who is approaching retirement age, the safe withdrawal rate, which usually is about 4%, adjusted up or down for inflation every succeeding year, as long as the client's goal remains the same, i.e. no need to change the initial asset allocation, you should do what you can, and this is advice for financial advisors, to dissuade the client from being too frisky with spending early in retirement. An initial 5% withdrawal rate is risky, and 6% or more is gambling. So the question becomes, with your initial asset allocation, how do you preserve that? And how can you possibly continue to live and maintain a house, such as the one you may be in right now, without eking out more money from your portfolio that you need to live on for retirement? So at this point now, what we're going to do is we're going to switch gears and meet with Homa Rassouli, who is a reverse purchase mortgage expert. And welcome. Now, what can you tell us about this crazy name, HECM? It's a heck of a name.
It is. It is heck of a product also. But thank you for having me here today.
Absolutely.
And as you said, I've been doing this for many years, and I've been in finance position for about 30 years and doing reverse mortgages for about 10 years now, and it has changed a lot. So what HECM is nothing but home equity conversion mortgage. So you can use this HECM for refinance, as you mentioned, or you can use this as a HECM for purchase. HECM for purchase is an FHA insured product that came in about 2009 just for the purchase idea, and that was part of the Housing and Economic Recovery Act. This product is FHA insured, and it's for people to use this to purchase a property.
Okay, this is a very interesting concept, and you've talked about that this is FHA insured. Yes. Why is that so important?
Well, when they started having reverse mortgages in 1960s, and it was not FHA insured, and that's why there is a lot of misconception about it, because people lost their houses. But since 1988, FHA has insured this product, and no longer people are losing their houses except if they don't follow the rules and regulation. But it is FHA insured product. So there has been a lot of changes, especially in the last few years, to protect the consumer from every possible thing not to lose their house.
That sounds very important. So why don't we talk about now how you would qualify for a HECM purchase?
Okay. As I mentioned, it's an FHA product, so we have to follow all the rules and regulation of FHA. People have to be, as long as one of the person on the title is over 62 years old, they can qualify for this program. They have to have this as a primary resident, and they qualify with minimum requirements as financial assessment. So it's easier to qualify rather than the traditional mortgage.
I see. So explain to me who might be interested in getting a reverse purchase mortgage. What would be the configuration or the typical demographic of someone who would apply for this?
Sure. You mentioned about retirement time. So when we become older and we become retired, it's harder to maintain our houses. There must be a lot of expenses regarding maintaining the house, and or the house is 2-story and there is the stairs, or the people want to downsize. They don't want to have any more bigger houses. They don't need to have that bigger houses. They need to relocate to their family, closer to their family. So anybody who wants to downsize, they want to change their house, and as long as they're older than 62, they can use this program. They can sell their existing home and purchase a new house with the reverse mortgage.
That sounds like a great idea. Now, timing-wise, how would you go about doing this? Let's say I decide, okay, I've sold my house, now I want a reverse purchase mortgage. Have I just done that correctly, or did I need to do something else?
It depends on what you are looking for and what is more comfortable for you. You can do it both ways. We can do the same transition. As you are putting your house in a market, I'm purchasing a new house, so you can do the same transition. We wait for you to sell the house and buy a new house with the down payment from your existing house. To buy a new house, we can do the same transition, or you can sell your house first and then look to buy a new house with the reverse mortgage purchase program.
So you are looking then to have money available for a down payment?
Yes, you have to have a down payment, and it depends on a lot of different things for the down payment. Depends on how old the client is. We go with the younger borrower age and find out how much they qualify for, what type of property they are buying. We can qualify single family home, 1 to 4 units, townhouses, PUDs, and as long as condos are FHA approved, we can go for that. So they have to have some down payment, which I can find out how much each person qualifies for and let them know how much they need to have a down payment. So they sell their existing home and buy a new house without using all their nest egg cash.
I see. Now it gets a lot more difficult to qualify for a loan, especially with today's new guidelines and regulations, when you don't have an income. Yes. So does this address that issue?
We have some financial assessment requirement, but it's not as the traditional mortgage. We have to have some income, and it's all because they want to make sure that they are protected in their house. Because with the reverse mortgage, there is no monthly mortgage payment required. The only thing that they are responsible for is property tax and homeowner insurance. And FHA wants to make sure that the client can afford to pay their property tax and homeowner insurance so they don't lose the house.
That's probably very important then to adult children who may very well be involved in the decision making of whether to stay or whether to move. And in fact, sometimes people are thinking, you know, I can't qualify for anything, I just better stay in place.
Well, we love to talk to the adult children as well. What I do is meet with the client. If they want to have their adult children or financial planner or CPA involved, we talk to them, I talk to them, and show them how much they qualify for, what the procedures are, what the interest rate are, everything about the loan. So they have a great information to see what they should do, what is the best solution for their parents, what is the best solution for the client to stay or to move.
So in the case of an FHA insured program like this, mom and dad pass, or perhaps they go into some type of an assisted living facility. Suddenly the estate is dealing with selling the property.
Yes.
So what happens if there's a significant downturn in the market? What will the estate look to do at that point?
Great point. FHA, all these FHA reverse mortgages are non-recourse loan. So what it means is the heirs or the clients never own more than their home value. So husband and wife living in the house, one passes, the other one can still stay in the house, both of them passes, then the estate will sell the property, pay off the bank, and keep the rest of the money. If something happens like a few years ago, market goes down, the property value is not there, they do not own more than their home value. So they can do two things. The state can buy the property with a lower price, or they can sign the deed to the bank and say goodbye. They don't have to come up with the negative amount that they owe.
Well, that certainly sounds like a way to make sure that the estate isn't completely drained of any assets whatsoever. And that had, I believe, been some of the complaints that people had initially about the reverse mortgage.
Well, because they start, if the people who are 62, the life of the loan is for them to become 100 years old. So the older they are, the more money they qualify for. And the younger they are, they have a long way to go, because now we live longer. So, and loan balances increases the same way as the equity increases. So it depends of what time they, if they want to sell the house, they can sell the house, move to another place, move to assisted living or anything. So all depends on what time and when and how much. When they sell the price or sell the property, or if they pass, how much their loan balance is, how much their house is worth, how much do they owe to the bank. So all of this depends. But the great thing is it's all deferred mortgage. They don't have to come up with any monthly mortgage payment. So for 25 years, they can have this loan without having any monthly mortgage payment. They only pay their property tax and homeowner insurance. And then, of course, the loan becomes due when they move or they sell the house or they pass.
Now, let's say I'm 62 years of age. I still have a few more years that I plan to work. What about if I did want to make a mortgage payment? Could I?
Sure. This is a great flexible loan. It's like a regular mortgage. If you like to make payments, sure you can. You can make payments. I have clients that actually are doing this, and they were 62 and they were still making money, so they wanted to pay the mortgage payment. So they are doing that. So it's up to you. It's very flexible. You want to pay your payments, you can. You don't want to make payments, you don't make payments.
Now, I know you're not a CPA, and probably you will defer to a CPA on this, but one of the benefits of owning a home are the tax benefits. Mm-hmm. So if you are not making a mortgage, then how would you respond to that issue of tax benefits around this?
I refer them to their CPAs.
Okay, but that would be a very important question for them to be asking.
Yes, yes. So usually, when we make payments, we can deduct, and if we are not making payments, we won't be able to deduct.
Okay. Now, what about if I want to move out of the area? Am I constrained to where? No.
It's a very flexible loan. There is no prepayment penalty. I always tell my clients, you win a lotto in 6 months, you want to pay it off, you want to pay it down, you can do it anytime you want. You decided to sell in 5 years and move some other places, or buy another property, you can sell this place, buy another property with reverse mortgage again. So there is no restriction. There is nothing to hold you up to it.
So no limitation on how often you could do this?
No.
You would just have to qualify again?
Yes, you have to qualify. It's like a whole new loan. So you have to go through all the application, all the procedures to qualify for another reverse mortgage.
Now, you had mentioned also that there's counseling, financial counseling involved.
Yes.
Tell us about that.
So FHA requires, because these are all FHA loans, FHA requires to be counseled with an FHA counselor after we talk to them. So that's another step. We give them all the detailed information. When I meet with the client, I give them all the detailed information about everything about the reverse mortgage, how much they qualify, what the interest rates are, how much everything is. And the second step, if they decided to go for it, they have to be counseled with an FHA counselor, which I provide list of 30 counselors to them. So they have a choice that they call them, make an appointment with them to either meet with face-to-face or on the phone. And what they would do is they would go over all the detailed information as we did. They go over all the numbers, and they want to make sure that the client is understanding what the reverse mortgage is and how they are getting into it.
Okay. Well, my understanding is that by not paying a mortgage, you now have money for your everyday living expenses. And as it pertains then to that 4% rule, it would enable you, presumably, to keep intact your retirement portfolios and be able to follow that 4% rule.
Yes, for sure. There's a lot of attention from financial advisors now, and what they're saying is use your housing wealth instead of your portfolio to prolong your cash reserve. We are living longer these days, and we need more money at the elder age, and so it's great to be able to save our portfolio as much as we can.
Especially in a lot of in times of market volatility, much
Yes.
like we're having right now.
That's
So if
for
you're
sure.
siphoning off more than that 4% in a volatile market, it actually could really deplete your assets very
That's right.
quickly. And this is an area with a lot of built up equity in their homes.
That's right. So we say use your equity rather than your cash, so you prolong your cash reserve.
Well, this sounds like certainly an excellent opportunity, and presumably if somebody wanted more information on this, they would just simply call you or another reverse purchase mortgage person to find out a little bit more about this.
Anytime, I'd be more than happy to give them information. There is no obligation. You can call me, I'm local, and I'd be more than happy to help anybody who has any questions.
Now, after hearing this information, in your opinion, what are the typical concerns that people have about the program? Does it really truly help them to decide whether to stay or move? What are the things that you've found when you've counseled people?
Well, it gives them the direction. And I think when we show them how much money they are going to be saving, how much money they can be putting in investments, how much money they can live more comfortable with and have another house that they like, more comfortable and more desirable, then it's their decision. But until they go over it and they find out yes or no and how it works, that doesn't work. So I think everybody should look into it, and if they're interested, to find out what it is. So maybe they can sell their existing home and walk out with a lot of cash and buy another property and live more comfortable and have a little bit of investment so they can live more comfortable. So I think everybody who is getting up there after 62 to look into it and see what they can do better for them.
I know in Marin County we have a lot of people who are in houses that are very large for their needs, maybe a lot of stairs or maybe hillside property, and at the time they needed to be close to their job. Commute was a factor. Now that you're approaching retirement, commute is no longer quite that factor. So for somebody who might be thinking, okay, I have my family here, my friends here, I'm not really interested in moving to Arizona or someplace else. I would really like to stay here. Now, that could work for them.
Sure, it could work as getting a line of credit against the equity of the house. So if they don't want to sell, they can stay in their house and using their housing wealth, their equity, instead of using their portfolio. So they can refinance, get a line of credit with a reverse mortgage, and if there is some mortgage, we can pay it off, and all depends on how much they qualify for, and they can use the line of credit as they go on.
So that would be staying in that specific house?
Yes.
Okay,
if
now
they like to stay.
there's also the opportunity to sell that house that may be
Yes.
too big. I had a phone call one time from a client whose mother lived in a house with over 20 steps to get to the front door. She had had a hip replacement, and once inside had all kinds of stairs that she had to navigate as well. And she was thinking about this very idea of using a reverse mortgage to pull money out to be able to repair the roof, repair the decks, and a whole host of deferred maintenance that had gone on. And the son was very concerned about her doing that because she still needed to have income in order to live. So if she then used the reverse purchase reverse mortgage to fix her house up, it still didn't address all those steps and the son's concern that this might not be the best house to age in place. And that's a very important topic.
Yes.
About finding a more friendly house, a more user-friendly house so that you can age in place. And that could be, the final house that you end up having.
Yes.
So from this perspective, this sounds like a really good program.
That would be the best, because then they can sell this existing home again, sell it and buy with a reverse mortgage, and keep some of the money from selling this existing home, if there is anything left after the down payment, to use as an investment or get a guaranteed income from that nest egg cash, so they don't have to use all that cash to purchase another property. So there is, as you said, in Marin County, there is a lot of people like that, and that's why we do a lot of different information, educational seminars, presentation, to show them that this exists. At least there is another retirement option. There is another option that you can purchase with reverse mortgage, and we are here to help you. So take advantage of it.
Well, I like how you call this a retirement option. Now, I know for people that I have spoken to, because we have such limited inventory, where do you go here in Marin County? And if you're in a big house and suddenly you have to downsize with your possessions, and suddenly you're having to get rid of that, that's a very emotional thing to have to do. But I would imagine that the payoff is, if you don't have to pay a mortgage, you're then left with money to be able to live on without the stress
Yes.
of the cost of living increases. And if you're on Social Security, sometimes income is very limited through that.
That is for sure. And I see it more and more every day. And this is another great retirement option to look into it. Of course, it's not possible for a lot of people, but at the same time, it's possible for a lot of people. It depends on what you are looking for. And stress is a big factor. And I'm going through that, and I see it with my clients, and they tell me that moving and buying with a reverse mortgage or staying in their house and getting a line of credit has done so much for them, with the peace of mind and relieving all the stress, because financial situation is very important, and people are very proud. They don't want to have any of their children or anybody else helping them, and they have all this equity in their house, and why not to use it and live more comfortable? I'm not saying that they need to start luxury or anything like that. At least live more comfortable and be able to be living stress-free.
Well, I know one of the concerns would be, where will I move if I try to stay in this county? And there certainly are a number of options for people to move into, including 55 and over housing.
Yes.
And do you see that, people moving into retirement communities?
There is a lot of different options. They are using 55 and older. They are using smaller houses, townhouses, some condos that are FHA approved. Some PUDs, I see a lot of PUDs these days that the customer are very comfortable, and that's the purpose, to downsize and be more comfortable, no maintaining, no doing a lot of landscaping or a lot of problems with expenses to maintaining your house. So they can find, if there is a way, there is a will, there is a way, so they can find a better place for them to live and be more comfortable.
Well, in selling your house, that's a tax event as well. So no doubt you'll have to assess capital gain, you'll have to work with your accountant on that issue.
Yes.
So this is very important to recognize that a team of advisors is really important to have. Your accountant, your financial advisor, again, a realtor, and someone like you to help advise them. So that is very important that that team be assembled. Now, as it relates to Marin County, it's very difficult. We have a bidding process that goes on, usually in the lower price points, for the type of house that somebody who's getting close to retiring would want to move into, which oftentimes would be competing with a first-time home buyer.
Yes.
So it becomes very difficult then to be able to find that perfect house. So what if you sell your house, maybe you move in with your children for a while, or you rent? Mm-hmm. You could then still go ahead and use a reverse purchase mortgage at that point. Okay, so there's no time that has to lapse, or you don't have to necessarily sequence it right away.
No, I think selling is much easier these days in Marin County than buying. So if there is a person who wants to sell and get a good deal and they want to sell it right away, they can sell it right away, deposit the money into their bank account, and stay, as you say, with their family or rent a place and buy at the time that they are more comfortable with, and use the reverse mortgage to purchase then. There is no requirement to do the same transition, but we close in 21 to 30 days, just the same as the escrow open. We help with the client to do everything, if they want to do the same transition at the same time. So it's up to them, whatever they want to use. I'll be there to help them out.
Okay, and in terms of what kind of market are we in right now? Is this a buyer's market? Is this a seller's market? And what I would advise sellers who are thinking about selling right now, for those lower price points here in Marin County, it depends on where you are, north or south, but usually it's going to be under $1 million. And keeping in mind that there isn't a lot of housing that is being built here. So what drives that equation of whether we are a seller's market or a buyer's market depends on the number of units that are available for sale and the number of buyers who are out there. So for homes that are perhaps over $1 million, there become fewer and fewer people who can qualify if they are in fact going to get a loan. So it really means then that that lower price point tends to be a little bit more impacted. And then here you are as a seller selling your home in what is a seller's market, where now you might have the upper hand to negotiate with your buyer on price and terms, which might include a rent back period.
Sure.
So that you could use that rent back period then to locate a new house.
That's for sure.
Or to get yourself ready to transition on. So in a case of being a buyer in a seller's market, then the reverse is true. You are then, subject to the seller, who, much like you just came from. So that is something to keep in mind as well. Well, this has been very informative. I really have appreciated learning about this, and it sounds like you are the go-to expert in this.
Be more than happy to do it anytime.
Okay, great. Well, thank you very much, Homa.
Thank you very much, and call me with any questions. Thanks.
I'm Margaret Capranos. This is All Things Real Estate. Until the next time.